Welcome to this week's Cattle Call. I'm Susan Littlefield. A variety of factors that we're going to look at in the market, and no surprise that the USDA's report had an effect on the trade. But some good news, got some cash moving, got some beef movement across those plates for folks as they get back to whatever normal is going to be. As you can see, Brad Kooima joins us on the screen. He is with Kooima and Varlick out of Sioux Center, Iowa. So I want to start with some positives. Let's look at this cash trade. Kind of nice to see 118.
You said it. Thanks for having me on, by the way, Susan, of course. So the Fed Cattle Exchange of late, that's the normal Wednesday deal, has been a little less than inspiring for a number of weeks. This week they had a fair number of cattle on, though not many traded, but we did trade some cattle in Nebraska as high as 118, which obviously is higher and encouraging. Typically the Wednesday trade doesn't necessarily represent the high of the week either, so I think that leaves us a little bit enthusiastic. The trade in Texas on just a couple of pens was only 116.50, and now there was some country trade here just a little bit ago. I picked up in Nebraska to one of the regional packers at 118 picked up, so that's starting to trade just a little bit in Nebraska also, Susan.
So having said that, before we look at this grain report and the effects it had on the trade, what are you hearing for demand and movement? Because more and more places are lifting their requirements.
Yeah, which is awesome, right? That's a good question. We continue to see outstanding demand, almost at such a high rate of speed you worry about, whether it's almost going too fast. The boxes were up over $5 yesterday, and they were up a little bit again today. But we've had great retail demand here right through the back half of the COVID thing. In other words, the Costco, the grocery store, the retail business has been like none before. But now we're starting to see a kick in the hotel restaurant business, where, like you just said, more states are loosening up, more restaurants are opening up, and it's getting to be warmer weather. People are a little more fired up about going out in public after being cooped up, quarantined, whatever. And there's a segment of the populace that is ready to get out there. I think you're one of those, Susan. So yes, that's domestic, which has been good, but people don't always talk about the export business, but year-to-date export business is at like a 5-year record as well. So our demand is not just good, it is great, which is awesome.
So how did the cattle react to the USDA reports of Wednesday? We had 2 reports that came out and saw limit up trade on the grains.
Yeah, like, first of all, wow, right? The USDA doesn't disappoint if they're looking for surprises lately. So initially, limit up because the acreage number is much less than expected on both the corn and the beans. Apparently, we're not going to plant either one. So the initial reaction was a steep break in the feeder cattle, right? Big higher cost of gain. We don't want to pay as much for feeder cattle. Makes sense. But it didn't take very long here before some of the trade, and I would certainly be in that camp that goes, yeah, well, high price feed actually does lead to higher price livestock, especially in the deferreds, as you maybe tilt that market where you see some breeding stock, or maybe sell some cattle a little quicker than you might have otherwise because you don't like the cost of gain, but that means less tonnage back into the market. So even with feeder cattle not quite $3 lower, I thought they actually fared pretty decent, but the back end of the cattle turned around really nicely, and the only month that wasn't higher was April. And of course, it's April tomorrow, and we're subject to delivery on Monday, and we are almost at 121. So we are a bit of a premium to cash. We may want to keep an eye on that, Susan, because I wouldn't be surprised. There's been a few deliveries every other month out of the South, so we'll probably get a few this time. But boy, the market just feels so much healthier than it's been for so long.
It's happy to say we're hitting the month of April, and that means spring is officially here, and those grills are getting dusted off, and let's get some meat movement.
You got it. Let's get the packer to share a little bit of his margin with us. We could all use a little bit of profit. Cattle here still don't make any money for the producer. So, but I think, we have reason to be a little bit more optimistic than we've been for a long time.
Let me wave that magic wand.
There you got it.
All right. Thanks so much. Brad Kooima has been joining us this week. That is Cattle Call. Just a reminder, commodity futures and options do involve substantial risk of loss, and they're not suitable for all investors. Have a great rest of your week. It's the Cattle Call on the Rural Radio Network.